Hey traders, welcome to Charts and Coffee. Great to have you here. Happy Wednesday, everybody. We need to take a look at the economic calendar. That's just kind of where this week is most focused. There's three ways a market can be moved. Yes, we're going to see price and technicals move a market. We're going to see events move a market. And really, I think in a lot of ways, the macroeconomics, which are far slower but far more powerful, can definitely move a market. Now, anytime we have jobs, we have inflation, or FOMC chuckleheads speaking, we are going to have a potential market moving event. Meester was up at 8 a.m. this morning. We'll see what we've inherited so far post Meester. Actually, not quite the Barkin effect of yesterday, and the little bit of strength we're seeing seems to be holding. A little bit of weakness on the VIX earlier in the morning. We have Chicago PMI, crude oil inventories. Please keep an eye on the economic calendar. Non-farm payrolls is up this Friday. And for those of you that are members of the Sector Secrets room, we're going to do a non-farm payroll 8:20 to 8:50 live trading event. Some of you here on the YouTube channel have seen me do that live before. I think we did a couple of those in June. We're going to do it in the Sector Secrets Mastery on Friday. Heads up for that alert. So I'm looking really forward to using the HPMRs and trading this event with you all Friday morning. And then the rest of the day becomes a little wonky. We have the end of the month today, which has its own, for sure, shenanigans. And then we go into the beginning of the fall trading season, which really, for all intents and purposes, begins September 8th, next Monday. All right, so with all that being said, we've got a lot of Fed members speaking. Keep an eye on really two calendars, forexfactory.com and tradingeconomics.com for those hot zones. All right, first up with our questions this morning, let's get to it. And that is, let me get some of these other charts out of the way. There we go. Hey there, Brian. How are you? CVS, you got it. CVS was a tricky position, and it was a low-weighted relative outperformer within the XLV, the healthcare ETF. Now, in terms of where we are right now, it's a broken up trend. But as I was talking about in, I believe, the mastery room yesterday and the futures room as well, broken up trends are not then sort of this de facto downtrend. What we have with broken up trends are chop with a bullish bias. What do I mean by bullish bias? Well, we want to respect the trend that was. That's a Dow truism, Charles Dow truism from Dow theory. And I'll still be looking for an oversold buy, but CVS is not oversold quite yet. You can see our stochastic isn't there, but it's definitely something that we can look at in terms of more of a bias to the upside, especially since the trend that preceded the trend break was up and we're still above the 200 propulsion. So that's the way that I'm going to process what's going on there in CVS. All right, next question. Student asks, when day trading with the slow stow on the 5-minute chart, do I incorporate pre-market data for the indicator's time period? I was afraid of an overnight gap might confuse the indicator. Student of truth, remember that if I'm day trading, it depends on what I'm day trading, right? If I'm looking at the S&P, no problem, because the S&P has been trading actively since 6 p.m. the previous day, 6 p.m. Eastern. So when we take a look at this ES right now, so again, any futures contract like the ES, NQ, YM, RTY, bonds, crude, gold, currencies, metals, right? Treasuries, metal, treasuries, currencies, metals, indices, energies. They've been trading for hours and hours before we even get to 9 a.m. So in that case, no. When it comes to, say, equities and ETFs, things that have that 9:30 start, I'm not going to change the anchor time. I'm still going to use that 21 K3D. but I'm not going to trade an ETF or a stock without first understanding what the underlying index is doing. So that's the way I compensate for that. Now remember, overnight gaps are only going to be applicable really to futures on Sunday, and that's over the weekend, right? Or equities and ETFs. Thanks for the question. All right, next up, Rafael asks, based on prior data on September, the market is bearish. Based on prior data, September market is bearish. I don't quite follow September market. Oh, you mean historically, seasonally? Gotcha. Okay. Sometimes I got to read between the lines here on the questions, but I appreciate the angle, which is Rog. Do we have any? And hang on, let me get to my seasonal here. Where the heck is it? There we go. So if I'm going to take a look at, say, the S&P and what the seasonal expectations are. So let's see. Can I look up SPY? I'd rather look up S&P. SPY is fine. Last 10 years. It's the last 10 years. Now, it's really important because this is where seasonals are so often misused, darn near abused. And that is, you've got to detrend a seasonal, because the general gist of an equity market is to move higher. And if you look at a seasonal without detrending it, you'll lose that nice oscillation of an intra year, right? What's happening throughout the year in terms of movement. And yes, you can see here August, September, October after the last 10 years. Also remember though, the thing that will override a seasonal is most definitely the macroeconomics of the current market. Not to say the last 9 or 10 years cannot have sort of a seasonal impact on what we will expect. Remember, those seasonals were not born of stocks and treasuries and currencies. Seasonals were, as the name implies, things that are affected by seasons. I mean, weather, corn, wheat, cocoa, soybeans, the natural ebb and flow of sort of the living things that are commodities. And now we've applied seasonals to everything. But remember, once upon a time, seasonals were really more about the weather and planting and harvesting and storage of grains and things of that nature, softs. So I'm not a big fan of saying the seasonal tendencies of treasuries or currencies or indices are necessarily as rhythmic and dependable as the fact that we know seasons are going to change when it comes to planting season and harvesting season, and what corn is going to have to withstand as it's growing, and then what the yield is ultimately going to be. If we have a macroeconomic event, that's going to absolutely eclipse any of the seasonal. So I'm with you, Raphael. I think I understand the question, so thank you. Yes, there's a tendency for this, but remember, tendencies are not trades. And then if we've already seen some weakness, as the expectation is that the Federal Reserve is going to be a little bit more, and I do mean a little bit more, quarter point more hawkish than initially anticipated throughout most of 2022, we don't have to live out this. This is not reality. This is a potential reality. So I love the question. It at least lets us balance out what could be versus what is happening. And if we start to align with this kind of movement, you're right. Then we need to make note of, okay, the seasonal does seem to have a really good grip on the market. XLB and XLI, any comments about XLB and XLI? Basic materials and industrials? Sure. Let's see. Your premise is they're bullish. I don't have XLB as bullish. XLB is bearish. I don't have XLB as bearish either. But to your point, it's still under the 200 propulsion. I agree with there being more of a bearish chop opinion on XLB. I'm with you there. Looking at the grab candles, looking at the multi-trend, looking at where we are in reflection to the 200 propulsion. And as far as XLI, again, this one's tricky. Would I, for the most part, think the path of least resistance, not the momentum. Path of least resistance for me is a trend conversation. So when we say things like, again, we have so many things we say in trading. When I say something like a path of least resistance, that is only going to be when we've crossed the threshold like the equator, the 200, or we have a trend. Momentum is not a path of least resistance conversation. For me, it's always going to be reliant on, are we in the bullish or bearish hemisphere? That could be a 200, that could be an anchored VWAP, or is there a trend? And I do agree. While we don't have a trend any longer in the XLI, I would, from a trend perspective, presume that the trend that was is still the most influential. Path of least resistance is higher. I'm with you. I'm with you there. All right. Next up is Wheezy asks, at what point in the month do we swap a future month? Oh, for the ES. Well, so micros will switch just like the minis, Wheezy. And you know what? Let me see if I can't find this. So if you want to look up here, let me do this with you all. When do we roll is the jargon, right? That's the techno babble. So if you go to and look at CME, and then I used to call these pit dates because this is when the pit would switch from whatever the current contract month was to the next one, and we'd have a new front month. So I used to call it a pit date. I didn't know it was called a roll date. Goes to show it doesn't matter what you call it. But if you Google CME roll, no, it should be roll date, not roll pit, right? But you'll get the same thing. CME roll date. There we go. What's up, puppy? Puppy is not amused by charts and coffee this morning. All right. So there you have your equity roll dates, and then scroll on down. There you go. And when the mini rolls, that's when I would roll the micro. And you can Google that, maybe. So now, where's my bind? Oh, here we go. Take a peek. I probably do need an intervention at this point. So I have a planner for, life. And then I have a planner for trading. In the trading planner, and I would always recommend that one of your trading planners, I like a weekly view and then a monthly view. So at some point, I'm going to run into the new month view on my planner. And that's where I'll write down all the different. So this is, for example, the blank sheet of October, the whole month on a page. And that's where I want to write down, reminders of those big macroeconomic releases. Oh, and I actually also have a blank, simpler trading plan. I do mean to keep reviewing this with the mastery folks. We'll probably do that in September. So I'll write all that down. Wheezy, I would write down two things. When is the first notice date? You can write down the roll date, right? And then I would also mark down, especially if you're swing trading and not day trading. If you're swing trading and not day trading, I would also write down 2 weeks before that date. Keep that calendar active because we can't remember all this stuff, right? I know I can't. So I always like to write that stuff down. So there you go. Hey there, Amit. What are my thoughts on the Dow? All right. Let's see. What do we have here? DOW. I like this potentially to the upside, but take a look, Amit. See, this is I'm going to make this really ridiculously large for a moment. And if there's anything I hope to, convey to everybody when it comes to when to use different indicators, let's talk about the slow stow. It's one of those indicators I use. It's built into your platform. I love that it's just an easy thing to use. Got to be a neutral market environment, gang. All right. Then take a peek. This is the low. That's the 20 level. The closer we get to it, the closer it's oversold. Take a look also at the Darvis. Oh, we have Darvi. Look at these Darvis levels. At what Darvis level are we oversold? Keep that in mind. That's going to map to your trade. All right. Next up, my Cessna Pilot. I was just talking about pilots and checklists in one of my favorite books, The Checklist Manifesto, this morning, as far as traders having a similar type mentality of, okay, what if something crazy happens? What's the system? What's the process in place to keep us on track? With the ADP non-farm payroll job lower than expected, I'll tell you what, my Cessna Pilot, nobody really cares about ADP. I'm actually amazed that it's even on the calendars anymore. It's always been this irritating little release that never really does map to non-farm. So for example, there are a handful of hot zones where there's sort of this minor hot zone that's supposed to maybe echo to what the larger hot zone is going to be. We have it in crude, for example. We have the API, the Private American Petroleum Institute release on inventories, and we have the EIA like we have today at 10:30. So the API, EIA, it's a very interesting symbiotic relationship because it does affect what traders are expecting for the EIA release. ADP, I'll tell you what, I've spent pretty much 20 years ignoring ADP. And I'll tell you this, nobody gives a rip about ADP. So I love that you're asking about it. Does it matter that it's a miss? It might start to affect, and this is where we do want to remember there's some application. It might start to affect what non-farms expectations are. So if we're at 295 and you start asking yourself, what are the whisper numbers for non-farm? And I'll use something like the Estimize site for that. What are the expectations for non-farm? Are those expectations dropping because of, let's see, are they dropping because of this ADP? And that will be something to take a look at. And I'll study things like that as sort of the whisper number. That could be the effect, but really, I don't believe ADP moves the market all that much. And if it does, today's ADP should help the market move higher. So 815 forward, if we start to see a little bit of strength, because remember, bad news is good news for stonks. So since 815, are we seeing a little bit of strength? I can't say that it really did much. But thank you for the question. Is ADP really that important? Not really. However, let's not ignore the fact that it could change the way in which traders are expecting non-farm to print, and maybe it creates some 815 to 830 volatility. But longer term, I just don't know. A lot of folks keep really that close an eye on it. Hey there. How are you, Schwab? It's on our list. Deborah, we put it on our list in the mastery. I'm trying to, there's my, so when I look at this list, this is the planner that has all my, and Schwab is on this. There are some relative outperformers in XLF. I do like XLF. All my cards on the table, I have a long position via calls in XLF. If I were to broaden that exposure, it would not be necessarily more XLF. It would likely be a relative outperforming boat within the tide of XLF. And Schwab is definitely one of them. Yes, I agree. Definitely one to keep an eye on. And you can see here, it's doing some battle with the 200, no doubt. It's also got a green, double green since what? The middle of August. And it's surfing the wave nearly. It looks like it's surfing the wave too. So we'll definitely keep an eye on it. It won't be executable up at 72 and a half, 73, but the closer we get to 70 and a half, 71, definitely worth keeping an eye on. All right. When will I not think we are bullish on the market chart wise? Great question. Gang, my gut has neither fingers, can you imagine? That's kind of spooky, nor can it reach the keyboard. A lot of traders trade by gut and experience and all this other nonsense. And while I do believe in Malcolm Gladwell's Blink concept, if you've never read that book, it's a really great book, easy to read. You'll have it done in less than a day. Even I do believe in Blink to a certain degree. We must trade what we see, not what we think, not what we feel, not what our crystal ball is telling us, right? I think you all know that. When I have at least, say, 8 red grab candles in a row, eight sessions, right? If I'm going to make a broader opinion about a daily trend, I'm going to give it maybe, at least 8 sessions, maybe 5, to show me that there's consistent weakness. But I have the objective. They don't care what I want. They don't care what I think. That's the 8, 13, 21, and 34 EMAs. 34, of course, a big reason. This wave is on my screen. The grab candles, that's the reason. When those go red, I'll have a downtrend. When I have 5 to 8 red grab candles in a row, I can start thinking about maybe that there's a downtrend. If not, I've got chop. And I think a lot of traders, sometimes, not in this room, but I think a lot of traders are sometimes in a rush to categorize a trend as up or down, when in reality, accumulation and distribution were two out of the four market trends that Charles Dow taught us well over 100 years ago. And the market spends an inordinate amount of time in these choppy environments where traders are still persisting on either a trend reversal or treating that market as a trend, when in reality, it's no longer really moving with that same swagger. We've lost the bullish swagger, no doubt, but it's not a downtrend. So until those things switch, until my colors tell me that we've aligned bearishly, not yet, not yet. Okay. All right, gang. That's a great question to end on. Thank you as always for being here. Caffeinate and dominate, my friends. Heads up, busy FOMC schedule. Look at all the speakers, Forex Factory and or Trading Economics. I'll see you tomorrow, same time, same station. My Sector Secrets Mastery, folks, we've got our 2-part live trading coming up next. Day trading until about 10:35. And then we've got our hour of swing trading setups and scanning going into almost noon. So we've got a big morning in on the schedule. All right, gang. Be good to each other. I'll see you tomorrow.